As we mentioned, we're in rally mode here today, but it's not rally mode for every stock out there. Slack, as you can see, battling its way back, now down still about 3% there. The company plummeted over 10% earlier, despite reporting quarterly earnings and revenue that beat estimates. Shares, though, coming back from that steep fall that we saw yesterday after market hours. The workplace messaging platform posted an adjusted loss of 14 cents a share on revenue of $145 million. And joining us now to discuss is D.A. Davidson's Senior Research Analyst and Senior Vice President Rishi Jaluria. And Rishi, when we look at the numbers, it's interesting because the growth expectations for this company, I think, are very high. So anytime you don't meet those, there's a little bit of a pullback. But we're seeing Slack bounce back here. So what's really going on?
Yeah, and it's a little bit of a wrinkle on it, but look, they put up, I think, was a really strong quarter, and I think people recognize that because they're so focused on customer success, which is what I think any software company should be. Yeah. There was a little, one-time thing where they had an outage, and if you check Twitter, you read any of the blogs, you would have found that people were kind of going crazy about it because they're so dependent on Slack. That kind of showed a little bit of a deceleration on the top line, but if you factor that in, then there really wasn't much of a deceleration at all. So overall, I thought, it was a strong quarter, and all the other underlying metrics were also pointing in the right direction.
Yeah.
So then in your mind, was there a little bit of an investor overreaction? Because the report seemed pretty strong to me, so I wasn't sure if I was missing something.
No, you're absolutely right. Look, when the stock was down 15% to start the day, in spite of the fact that I'm neutral on the stock, I said this is absolutely an overreaction, and it started to kind of claw its way back up a little bit. This is also a little bit of the pitfalls of having high expectations, and that's very evident in my sector of enterprise software, that a lot of these names are very, very expensive because they're growing so fast and because they have potential to become very, very profitable, and people understand they could find the next Salesforce, the next ServiceNow, the next Viva early on, because these companies are going to market when they're a lot smaller. And so there's just really high expectations, and sometimes you can do really, really, really well, but it's not good enough to placate the people who are invested in you.
When we talk about this too, though, this is the first earnings report for Slack as a public company. I mean, when you look at it, you mentioned the outage. There was an $8 million kind of hit when we look at it. But when you talk about the full year guidance, they actually raised that. It's $12 million above the midpoint in terms of where it was guiding before. So, I mean, when we look at it, the market opportunity is so huge because they're trying to replace email at all these companies. But is this kind of showing, when we look at kind of a flat growth rate over the last quarter, is that kind of showing that maybe Slack won't replace email at all these companies?
Look, I guess that's a little bit of a misnomer, right? That Slack is going to outright replace email, because email itself hasn't outright replaced phone calls and faxes and letters. People still do that.
Yeah.
But it's going to go more and more in that direction. And I agree with you. This is just a huge market opportunity they're going after. On the guidance, keep in mind all these newly minted IPOs and new to the public market companies put the guidance bar very, very low so they can kind of get into a comfortable beat and raise cadence. Sure. And we see that with Slack. The fact is Slack beat their Q2 guidance in spite of this $8 million headwind. So that tells you they definitely guide conservatively.
Still getting punished today.
Right, but look, the market opportunity I think is absolutely immense. This is a really loved product within tech companies and tech-forward companies, and we're starting to see early signs of more traditional slow-moving industries like mine, financial services, adopting it, where we saw a $1 million plus deal with a Fortune 100 financial services firm announced yesterday.
Yeah.
So I think the opportunity is absolutely there for them to seize. It's really just execution.
When it comes to forward-looking guidance, this is not the first IPO to come out this year for companies that aren't yet profitable. And I think we're really looking to see at what path are we going to see that? Is it in the next year, the next 3 years, the next 5 years? When we're looking at Slack, how soon are we going to get into that point?
Yeah, look, it's one of those things that if Slack wanted to, they could be profitable right away. And I know every company says that. And so within software, we have this kind of rule of thumb we use called the rule of 40, which is that your revenue growth rate plus your cash flow margins, or cash burn in this case, should be equal to or higher than 40. And Slack is well above a 40 on that place. So that tells me, fine, they're burning cash, but they're doing so in a responsible manner. And they have this kind of glide path that's very visible in their financials, that they're efficient on their sales and go-to-marketing model. They've got really high gross margins. They've got this long runway of growth that I honestly think they could be free cash flow positive next year, and over time get to 25 to 30% free cash flow margins, which would be best in class. So I think the potential is absolutely there, but I wouldn't want them to underinvest when the opportunity is so fast and so huge in front of them.
And still pretty close to your price target. There you got a $31 price target. We're seeing it at 30 right now, so kind of close to where we're at right now, but still potentially moving forward some value there.
Absolutely.
As well. All right, Rishi, thank you so much for breaking that down. Appreciate it.